Welcome everyone to the Trust the Plan podcast. I'm Nick,
And I'm Jim.
and it's kind of a milestone here, episode 200.
Big milestone, yeah. 200 episodes.
Yeah, we're
Cranking them out.
we're grinding here. We don't have any like special topic for 200, okay? But I think this will be a good one. We're talking about the war in Israel and how that affects the U.S. deficits. Kind of a double topic, okay?
Mm-hmm.
So first off, I got to tell you a story though. The other night we went out to dinner at E.G. Nick's in Northville. Okay, I like that place. It's not as busy. That's one of the things I like about it. They had a nice remodel for the outside area, which we were able to sit at.
Mm-hmm.
So something came over me when I was looking at the menu. Just nothing jumped out at me, you know.
Mm-hmm.
And I know they have a pretty big menu, and there's probably a lot of stuff that I haven't tried yet, right?
Okay.
So I asked the server. I said, I want you to pick for me.
Mm-hmm.
Like, who does that, right?
Well, they should know, right? They know what sells.
You would think.
They may have tried it all. I don't know.
Yeah, you'd think. So anyway, if you know me, there's one thing that I just will never ever order: the meatloaf.
Okay.
Like I'm never going out to eat and ordering meatloaf. Never once in my life am I going to do this.
Yeah.
And why is that? Because I didn't really like my mom's meatloaf when I was a kid. Oh, Mom, you're making meatloaf again?
Yeah.
So sure enough, she brings out the dish.
Yeah.
And it's the meatloaf.
That's what they picked, huh?
And I'm like,
wow.
Like, what have I done? I should have said, okay, surprise me, but anything but meatloaf, right?
You're very passionate.
It was the
about
funniest.
that.
Yeah, I am passionate about it. I don't like it. Okay, just give me a burger instead, right?
Right.
And I've talked to people about this before, and they're like, well, you're just making it wrong or whatever. I'm like, I don't think so. I just don't think it's good.
It's not for me. Yeah.
Yeah. And so I think that's pretty funny, right?
Yeah.
Pretty ironic. I ate half of it.
So you tried it.
Yeah.
You tried it. Made your mom happy.
I smiled. I was a good boy. Okay. So on a more serious topic, right? We have the Hamas and Israel. I think we can say it's a war now, and it's it's a devastating loss of life, and it's just awful. And I think it's terrible. But the markets, right? They're measuring financial loss as opposed to loss of human life, right?
Yeah.
And when the markets opened up on Sunday, when the news was fresh, futures for the stocks were down a little bit, not terrible, and they actually rallied on the first open day of the markets, telling us that the market believes that it's not going to be a huge loss of money, so to speak. There's also a flight to safety with gold and treasuries, buying treasuries. Also, the price of oil spiked up a few bucks, and so that shows that there's risk in the region with oil flow.
True.
But we don't know. The market is the entire financial world's best guess as to what's happening, right? And so that's what they're telling us, is that it's not going to be a big financial loss. Okay, so we don't want people to misinterpret that with the loss of life. Okay.
Yeah.
But what are your thoughts? We're recording 2 days after, so it'll be a delayed.
Yeah. I mean, obviously the events are tragic, but it is interesting to see how the markets have responded so far. Some of the other comments and things I've seen have, because of the conflict, it's led people to think that maybe the Fed will pause its raising of interest rates, which is another thing that tends to be good for the market. That's what the market's been searching for, is when are we going to be done? And that's why we had a really big part of why we had a bad September was they thought, inflation's still there, the economy's still hot, employment numbers are good, they're going to have to raise again. Well, this conflict could potentially give them a reason or an excuse to stop raising interest rates again, which would be good for the overall market.
Exactly. And as we saw on the first day of trading, right, the market opened up lower and then closed higher. I believe it was because of reports that Fed speakers were out there saying just that. And so it tells us that the market cares more about interest rates than it does about the war.
Yeah. Yeah, I mean, interest rates has been, it's been a huge driver for the last several years to, everything we've seen in the market. So if we can start to get some insight on it, because that's the only thing the market doesn't like is confusion and things not being clear, right?
Yeah,
Uncertainty.
yeah.
So,
And so the second part of this conversation is, right, just like Ukraine, right? We've you know, and I don't want to say invested or loaned. I mean, we've gifted,
mm-hmm.
we've supported Ukraine with over, I believe it's over 110 billion
In aid. Yeah.
in aid. Okay, and so what happens with Israel,
Mm-hmm.
right? Are we looking at another situation like that where the Treasury has to come to help with aid?
Right.
Probably.
It
Okay,
wouldn't. Yeah, I mean, if history's shown us anything, it's that we're probably willing to hop in and send some money.
but here's the problem. Okay, and I think this is getting to a tipping point. Okay,
Mm-hmm.
right? When we've had low interest rates, right? Both Republicans and Democrats have been spending like drunken sailors.
Mm-hmm.
I mean, if we really go back to different conflicts and catalysts for debt, okay,
Mm-hmm.
we got to think about 9/11 and the response to 9/11, where we're spending literally trillions of dollars in Iraq and Afghanistan for
Mm-hmm.
decades.
Right.
Okay, right? Remember, before 9/11, before the tech bubble, we had a surplus,
Mm-hmm.
right? When Clinton handed over the
Yeah.
baton to Bush, there was a surplus.
Yeah.
Okay, so in Iraq, the deficit started. Okay, and they were several $100 billion per year.
Mm-hmm.
And then in the Obama years after 2008, there was maybe a couple $1 trillion deficit years, but then there was a lot of reduced spending. Like the Tea Party really
Mm-hmm.
helped with reining in government spending. And so the deficits, again, were in the several hundred billion, maybe like 500 range.
Mm-hmm.
Okay. And then we get into COVID in 2020. Okay.
Yeah.
$4 trillion
Yeah.
of
Really
debt
ballooned.
in that year.
Mm-hmm.
Okay. And in 21, 22, not that much, but still a tremendous amount. We have a graphic that we're going to pull up here. So make sure you're watching on YouTube. Okay. Um, and we can see now that on the year to date basis through September in 2023, we're at 1.76 trillion of net treasury issuance already this year.
Okay.
And Janet Yellen has said in the fourth quarter she expects an additional 1 trillion in net issuance. That's coming right now. Okay.
Mm-hmm.
So Wall Street Journal suggests we're going to be at minimum 2.76 trillion, which would be the second highest year on record behind
The
2020.
COVID year. Yeah.
Okay. So again, 2001,
Mm-hmm.
huge catalyst for deficits, war.
Mm-hmm.
2020, war on pandemic. Okay.
Mm-hmm.
These two government responses are largely where we find ourselves with the debt. Okay. Like
Mm-hmm.
it would be not great, but these two things put it into a very bad situation.
Mm-hmm. Yeah. Well, and like you said, and that compounded with the effect that now the interest rates are so high, meaning just to service the debt alone at these interest rates is going to start to be a real challenge.
Yep. So between the like you said it, rates were like 1% in 2020. Now
Mm-hmm.
they're almost 5% in
Yeah.
2023. Okay, and so we can go through the story to remind everyone. We Fed goes to zero. Uh, Treasury issues 4 trillion. Okay,
Mm-hmm.
gives it away to everyone.
Mm-hmm.
Okay, and then inflation soars. So Fed has to raise rates to help kill the inflation, and I think the inflation is coming down
Mm-hmm.
pretty good. Instead of 9%, we're in the 3% range.
Mm-hmm.
But as a result, now we have these high interest rates, and the Fed is suggesting, as you mentioned earlier, for a long time, and
Mm-hmm.
where the market is searching for the timing, like how long does that mean?
Right.
Okay. Okay. So now, if the Treasury is paying 5% on bonds
Mm-hmm.
on an extreme amount, well, now all the tax money that we pay in is going to, basically uh, interest on the debt,
Mm-hmm.
Social Security, Medicare, like Medicaid type stuff. Okay,
Mm-hmm.
and there's very little that's actually discretionary spending by Congress. Okay,
Mm-hmm.
so the Congressman Matt Gaetz, right, who's like trying to
Mhm.
draw the
Yeah.
line on spending, even if they cut spending across the board by 20%, it's not touching this
Yeah.
deficit. Okay.
Yeah.
So that's where I lead to the structural problem with the
Mhm.
government right now. And if you add another 100 billion to Ukraine and another 100 billion to Israel, it's just not a great time. You know what I mean?
Right.
And I'm not going to take the argument. I'm just going to look at the math, right,
Yeah.
and say the math doesn't work.
Mhm.
Okay. And so there's going to be a tipping point. So the Wall Street Journal article suggests not only all these things that we just mentioned, but can the market absorb all of this new debt?
Right.
Okay. Can the market handle it? It's a huge amount.
Right.
In 2020, right, everyone is flying to safety.
Yeah.
So we gobbled them right up. Okay. But right now, it's a different economy, a different market environment. And so I don't see people, right? Rates have been coming up, prices are going down. There's not enough demand right now.
Yeah.
And they're going to be coming with more
And
supply.
if they're going to issue more supply, right, that's just going to compound that problem.
It could, every market comes down to supply and demand. Okay.
Mhm.
And the Fed is not there to buy the bonds because they're trying to reduce their balance sheet.
Yeah.
But the Fed absorbed a lot. Maybe the Fed absorbed more than we realize in 2020.
Yeah.
So with rates up, it seems that there should be demand, okay, but it just hasn't been happening.
Mhm.
Okay. I love the idea of investing with 5% risk free. I really love that idea.
Mhm.
But I think, the market, has been skittish about it. Is it because the, the perceived guaranteed backstop of the Treasury is less, or is it
Mhm.
because they're looking at more attractive rates with corporates? We'll have to wait and see. Okay, but I think it was a good sign to see this week where Treasuries finally got a bid.
Yeah. Yeah, definitely. Because I think you're right. I mean, that oversupply problem could really cause some issues.
It could. I mean, when was the last time we had the Wall Street Journal or anyone suggesting maybe no one wants these Treasuries? Never.
Yeah.
Not in our life.
But it wasn't that long ago too that there was, there was another downgrade to the U.S.
Right.
So I think you could be onto something when you talk about maybe people are like, hey,
We had enough.
yeah, the math doesn't look great.
Yeah. So here's my solution. Okay.
Mm-hmm.
And you know, people aren't going to be happy about it. I'm not happy about it.
Mm-hmm.
But there's going to have to be cuts. There's one of two options. Okay, cuts to Social Security and Medicare, or more taxes to keep the benefits the same.
Mm-hmm.
And they're both bad options.
Yeah.
But there's no other way around it.
Mm-hmm.
Okay, and I also would like to call out all of the presidents and House speakers
Mm-hmm.
and Senate majority leaders of the last 30 years,
Mm-hmm.
or I guess 25 years. Okay,
Yeah.
I want to call out all of them, throw them under the bus. I don't care if they're Republicans or
Yeah.
Democrats.
Mm-hmm.
They've taken the debt from like 5 trillion to like 33 trillion.
Yeah.
It's just ridiculous.
Yeah. It's the damage they're causing is crazy.
And when it really comes home to roost, like I'll be retiring and they'll all be dead.
Yeah.
There you have it. There's my solution. All right. Hey, don't forget, we believe by providing education and guidance, we can help inspire you to make great decisions so you can retire with peak confidence. And if you like conversations like this, please subscribe and ring that bell and share with your friends and family. And we will see you next week. What a great episode 200, right?
Go down in history.